Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to take a look at a strong currency against a weaker one. And recently, what we've seen from the strength and weakness analysis that we've done lately and we highlighted in the Forex market outlook is the fact that the New Zealand dollar has been losing significant strength. And you can see here what I've done is I've isolated the New Zealand dollar and the Swiss franc. And what's happened recently is Kiwi has topped out here and started to drive lower, and the Swiss franc has bottomed out at -7s and it started to strengthen, and that's caused these two lines to cross. And when these two lines cross, it shows us that there should be a downtrend forming on this particular pair. So if I go down now onto this chart and we have a little look at the daily time frame first, we can see that price has recently broken through these swing lows just here, forming a lower low. Typically when the market does that, it's suggesting that we are going to see those lower highs being formed and we're going to see a move lower. Now looking at this daily time frame, price has now come back up into a little bit of an area. I would have liked to have seen a deeper retracement, but because the Kiwi is so weak, we may not get that significant pullback that we're anticipating. So looking at the market, what I want to do is identify a couple of areas where you can look to potentially get short and how you could look to get short and where price could go to. Now, where price could go to is this area down through here. The reason why is because price found some significant support here at this point, and we saw quite a large rally from the market on Kiwi Swiss here. So I imagine price would want to go and test this level in particular, or this zone in particular, as targets or as a testing area to see if price will break or retest the zone. So if that's the case, then I want to be a trader short to this area through here. Okay, how I want to do that is by looking for opportunities at resistance levels. Now you can see here recently in the past the market rallied from here about 3 times. The market then broke straight through that zone, and now we're retesting it and we're rejecting this market at the moment, or this zone at the moment. It's around about 0.66 as the key area. So one or two things that we could look to do is look for bearish price action. So here at the moment we have a bearish engulfing candle forming, which could be a trigger for potential short opportunities or for sellers to get back into the market. You could look for a trend line break, so that would be these two lows being your trend line support, and you could wait for trend line breaks in here. Alternatively, you could go to the lower time frame. So if I was to go down to the hourly time frame, we can see that price has consolidated, forming a little sort of double top pattern here at this 0.66 level. So let me just draw that 0.66 level in. So it's around about here. Let's just make that red so we know that it's the resistance zone. Price, you can see, has come up into here, and we are getting some selling at the moment, some selling pressure from this area. So what I'd like to do is look for price to potentially pull back into that zone where we could then again see those sellers re-enter the market. Okay, so I'll be looking for price to potentially pull back into this 0.66 area where we've already seen a little bit of a sell-off in order to get short again. Stop losses, you want to be covering above your highs because of the risk is to the upside that it breaks higher. However, strength and weakness suggesting that this market could break lower, and obviously Kiwi looking very, very weak at the moment. Alternatively as well, look to for an end of day position if the market forms a bearish candlestick in this zone. Hope you enjoyed this video update, and I'll speak to you soon.